Welcome back, everybody, to this week's Markets Unscripted podcast. Matt Caruso here with my co-host, Jason Shapiro. Jason, how are you doing this week?
I'm good, man. I'm good.
Well, there's going to be plenty of stuff to talk about this week. We've been discussing silver and markets, AI stocks, and all the rest. So has there anything that's been on your radar, anything you want to bring up, Jason, to kick off the podcast?
I think that every idea that I have had, other than that natural gas idea, which was great, other than that, every single idea I think I've had has been wrong, quite frankly. I'm just going through them and I'm looking at them, and I didn't think that silver was going to be a sale. Not to say I didn't think that it could have come down a little bit. I thought it could have come down a little bit, but then I thought it was going to like rip. It didn't come down a little bit. 40% in a day. I did not, in my wildest dreams, based on everything that I look at and everything that I monitor, think that that was in the cards. Not at all. The dollar stuff that I've talked about, the Swiss franc, yeah, it was working, and now it's kind of not working. But even the relative moves versus the euro and all this has been straight up wrong. Just last night, we were talking on I do a Sunday night conversation with our members, and I was focusing on crude oil, saying how, this thing has had a great month and energy stocks were the best performing subsector in January, which all kind of made sense to me from everything that I kind of look at, positioning and all that. And I kind of thought that that would continue to be the theme. And I mean, from the second I said that, crude oil just got smashed today. Right? It's the worst performing thing on the board, other than natural gas, I guess. But so I guess Bitcoin, I've been pretty bearish. I'm bearish on Bitcoin. I have been observing that it has traded horribly, and that I wouldn't really suggest being long it until it starts to trade better. So maybe I've been okay with that, um, but really, it's been you just feel like a moron, frankly, when you're wrong about 95% of the things you say. And I will point to the fact that as long as you don't lose money, it shouldn't matter. And I say that, and that's true. Be wrong, make money, that type of thing. But it's hard. Let's face it. No matter who you are and what you do, it's hard to get kicked again and again and again. But that's where it is, so the goal is to not lose money during this time, because then there will be times when you're not wrong about everything, and hopefully you make a lot of money then. That's the goal. Don't lose a lot of money when you're wrong. Make a lot of money when you're right. That's the game.
Yeah, yeah. So, it's been interesting for me as well, because I've had a bit of a similar yet opposite experience, because a lot of the stocks I've been focusing on, a lot of the themes, and we spoke about them recently last call, which have been a lot, all the different supply chain for AI. I'm always stock focused, and that to me has been one of the key themes. And so for me, the frustration, and I think this is an important kind of podcast to have, because it's just most people will just kind of like parade a never ending series of winning trades, which is obviously not the reality. And, I think for me, at least, I almost have less of a problem with being wrong. What really frustrates me is when I'm right for a good period of time, but I can't make any traction because just the volatility of the market, the choppiness, whatever, will kind of like knock me around. So, like, for example, just a few examples, like, so we've been talking about AMD as something like I built into, and they have earnings tomorrow. So built this up coming out of this reversal, which we spoke about pretty much in real time. So I built a position, added. I'm a position trader, so like I'm looking for trends. I have the reason as to why I think AMD can be a big winner. It had also relative strength versus the market. We had good news catalysts, so many good reasons. Made some great progress. Then we rolled over hard on Friday, so I had to back off. And lo and behold, here we are up 5% today. I had similar. I've been talking about the optical stocks, which I think is the next big supply constraint in the AI supply chain. tremendous volatility. LITE, another position I had, tremendous reversals. So, GLW is something I've been putting on, but downside reversal where they kind of undercut the breakaway day. So it's just been, there's been so much volatility. And that really comes to, if you take a look at the triple Qs, I know we're trading individual stocks. And to me, that's the bigger frustration is I can be trading what I think are the right stocks and I can look back and they're trading higher. And that's even more frustrating for me because like, oh, it's, small gain, small loss, small gain. Like on the year, I'm up a little bit. Like small, I was up quite a bit more before last week's downside reversal. But it's just that frustration of not being able to kind of get that, not momentum, but just that that persistent progress. And one thing, if we take a look at the XLP, I think this is what's been telling the story of 2026. This is what I went over with clients last night, and how this is probably the only trade in 2026 that has gone up and not stopped going up. So I've been kind of reviewing, just kind of like it's something I've looked at in the past when the staples. So for those who know the XLP, those are consumer staples. Campbell's Soup, PepsiCo, the really boring stuff you go to when you're scared to own anything else. Um, Let me just bring up another chart really quickly of something that I was sharing with some with clients. So here we see the same XLP chart in the top, and at the bottom here you can see the XLP but versus the triple Qs. And so basically, the red highlights are just when the ratio is above its 50-day moving average. I don't have that on here, but I could just put that on. But so basically, when staples are not only going up, but they're going up better than the triple Qs for a long period of time, it's just a difficult market. So if we look at the triple Qs in the top, and we just kind of have the same relationship in the bottom, if you look at every time the staples are outperforming the triple Qs, it tends to be to coincide with difficult markets, not always bear markets. It's not a timing tool. I don't use it as trend following because you can see there's times here where the ratio looks rough, and then by the time you get out, it's much higher. It's not about that. It's for me, it's how do I know if I'm in a market that's kind of like an easy market to operate in? And it's just been in my experience, this thing, something I think people can keep an eye on is if you go back in time and you look at this really simple relationship, all of the tough times to trade, just the markets where there's just no direction, which if for someone who's trying to build a position, trying to hold on to a trend, looking out 6 months, if you're in something and you have a cushion and it's bouncing around, fine. But if you're trying to put on exposure, which I'm doing because November had a lot of trend changes, looking at this year, this I think explains a lot of why we've been having this kind of difficult environment for stock traders because the Qs don't go anywhere. There's bursts of really good action, some stocks that have the catalysts, but looking at it objectively, not just like, oh, my trades or this, looking at it objectively, look at the internal relationship. When the staples are outperforming the Qs, it's usually a bad market environment. So, it's kind of the topic for today, like we started to kind of discuss a little bit, is sometimes it's like, you still need to operate, you're still running your business, but the goal is you can't take tremendous losses and really cut down your, go into major drawdown just because you're in a choppy environment. So it's about, and that forces decisions, like AMD, for example, I did want to sit through earnings with this, but when you see, losses on other trades, even if they're small losses pick up, well, then after you have to realize some gains or else you end up with just a whole bunch of series of losses. And when the market dynamics are showing you that it's a difficult market, you have to accept that and just know it's part of the business. And this is, in my opinion, Jason, I'd like to know your thoughts. I think this is where most people who are new to trading get in trouble because they have the opposite experience on the way up. They're right about everything because the trend is their friend. And then I think one of the biggest causes of disasters in trading accounts is not respecting the feedback of the market, learning and thinking that you were right because you're so smart. And when the market dynamics change, rather than kind of respecting and be like, oh, I've been wrong 8 out of 10 times, but I'm down 1% or I'm up 1%. Let me just back off, slow it up until I get I think that's the biggest downfall. It's this market that I think gets most people that are trying to trade with a bit of a process, not the buy and hold. That's different. That a bear market will get them. But those who are active, I think this is the market that's most deadly. What are your thoughts on that, Jason?
Oh, yeah, choppy markets are death. There's no question about it for traders. A choppy market is because it doesn't help anybody.
Yeah.
If you're trend following or breakout trading, that kind of thing, a choppy market ain't gonna help you.
Hmm.
And if you're counter trend trading, a choppy market's not gonna help you either. because it's just okay. You counter trend it, but it just chops you both sides also. So, um, yeah, and they happen. And
Hmm.
if you find an indicator that indicates to you that it's a choppy market, then that's obviously going to be a magic indicator as well. But then you have to have the discipline to say, hey, this thing has worked for me a lot in telling me the markets are going to chop here, so I'm just going to go skiing. That's the hardest part, right? We talked about this a few weeks ago. Not trading is a trade,
Yeah.
you know, a very important trade. Uh, to everything, there is a season, right? And when it's your season, go. And when it's not your season, stop until your season comes back again. There's a season for trending, there's a season for counter trending, and there's a season for choppiness, there's a season for all that shit, right? Obviously, if we knew for sure which season we were in, then we could, hey, if I knew it was going to be choppy, well, then I could sell strength, buy dips, sell strength, buy dips, and I can make a ton of money there too, right?
Hmm.
But, obviously that's just as hard as anything else to predict where we're at. But like I say with almost everything, the market tells you, right, where we're at. Your P&L is telling you where we're at. The reaction to how things are trading is telling you where we're at. How do I know that we're in a choppy thing? Because nothing's working. That sounds like it's choppy to me, right? Um, so yeah, it's just added to the list of why trading is so damn hard over time. Just add it to the list. Um, so
Let's
I
take a look at
seen a lot of people struggling
yeah.
recently. I
Let's take a
mean,
look at silver
you
because
find
I'm
me somebody. Is anyone out there? Find me the person who is when the Dow was down over 400 points last night when I went to sleep in the middle of the night. That was saying you got to be buying the crap out of this market right here.
yeah.
And look, I can go back in retrospect now and give you the whole contrarian take on why you should have been buying it and all that shit. It's easy for me to do that now that the Dow is up 500 points. Um, but it's bullcrap because I wasn't buying it down there. So, um, you know, I still think that, as I say all the time, shorting the stock market over time is the single worst trade that you can make. I still think that the perma bears have been jumping out of their skin for the last week or two. Now they have a whole new way to express their perma bearishness, right? It used to be it's a bubble or it was overvalued or the yen carry trade was going to blow everything up or Donald Trump and his tariffs and the new one now is Bitcoin, right? Oh, look how
Mhm.
weak Bitcoin is. That's an indication that the stock market is going to follow. That's like the new one now, right? Um, and for about, I don't know, 5 hours last night, these perma bears were just happy as a clam, right? And where are they now?
Yeah.
I just don't think that, you know, perma bear, these are people that have a history of not being very good. If they're going to continue to be, look, can a broken clock be right, twice a day? Yes.
Mhm.
But what are the odds of the stock market, which goes up over time? Okay. Um, we are in an environment where obviously there's some incredible things going on with productivity and all that. So that's hard enough to try and short it. Now you're doing it on top of these perma bears, it just increases the odds that it's not going to go down. And
Mhm.
again, this is all in retrospect, where was I last night when the Dow was down 450 points with this argument, right?
Mhm.
Where was I? I'm sitting short Dow. That's where I am, right? So that's where I was, right? Hoping that these perma bears that were correct for once. Um, but it's a tough trade, you know, and it's a
Yeah.
tough environment. I personally still think that if you are trading stocks and individual stocks, I still think, and even more so, that the place to be focusing on are this whole AI thing. I think that's the whole game,
Hmm.
um, and trying to find you know where the shortages are, and playing that game. It doesn't mean, like I say, you buy just because of that. But if the market is confirming it, then I think those are the places to be. Energy, right? Um, Metals and materials, and these have been working up until now. And I think that this is the issue, quite frankly, because what I'm saying may be true as true can be, right? But I'm hardly the only one that knows this.
Yeah.
You know, like that ain't no mystery, right? AI is no mystery at this point. The fact that we have shortages on all these things, the power thing, we don't have enough power and we don't have enough, metals and we don't have enough, all that stuff is hardly a mystery, right? I mean, Donald Trump's talking about taking over freaking Greenland, right? So we can get more of these metals, right?
Yeah.
And so that's, I believe, what causes chop. Something may be true, but too many people see it and are involved in it. So it's a battle between it's going up because it's true, but it's whipping people out because the market doesn't like to just give away gifts to people, right? Too many people get involved, it whips them out, just like what's been happening to you said, right?
Yeah.
And I think it's been happening to a lot of people, whips them out.
Hmm.
So what do you do? Um, I think you shrink size. You would expect that there would be more volatility in that type of situation. Clearly, there has been more volatility. I believe that volatility does beget volatility. We've had some pretty big volatility in Bitcoin. We've had some pretty big volatility clearly in silver and gold and platinum and these metals, even copper, right?
Hmm.
Um, and, I would say from down almost 500 points to up 500 points in a Dow in a day is some pretty serious volatility as well.
Yeah.
So if we're going to be in this kind of volatile environment, um, you shrink size. You don't need as much size on because if you get it right in more volatility, you're going to get it right bigger.
Hmm.
And if you get it wrong, then it won't kill you, right? So I think that's just natural.
Well, but to that point, I think that just is such a good opportunity to discuss how so much about doing this successfully, for over different cycles, different times is, yeah, it's about the ideas you have, but so much is about managing it. That's why I kind of hate when I see someone online and they go, I like Palantir since it was $9. Like, okay, I mean, Palantir has been in the ETF since it IPO'd. You know what I mean? Everyone maybe had a small piece of Palantir. It's about the size, the timing, the portfolio. That's really the difference between someone who can succeed over time and just like the one-offs, or like, okay, I can buy, one share of every stock on the market and say, oh, I had Nvidia from, $5. I still own my Nvidia. Yeah, but what size did you have on, or else the rest doesn't really matter. You know what I mean? So, so to your point, how you've described the year, how I've described the year, I think that's the whole game. That's what makes this go from just sharing ideas to being an actual business where you're trying to implement things with a risk control. Actually, for those who are interested, next Monday, we're having an open AMA at Caruso Insights. We're going to talk about our whole 2025 and live Q&A to talk about more the stock side of things. If you're interested, you can register. It's a free webinar. And if you want to learn more about Jason's work, of course, it's crowdedmarketreport.com. Mine's carusoinsights.com. But, speaking of this positioning and all of that, I think one thing that's really changed in the market that's been dramatic has just been how people have learned to become so incredibly levered. Like, people not only want to make money, they want to make money instantly with massive size. If we take a look at that silver trade, now it's always easy in hindsight, um, but looking at this massive break, the CME had raised margin requirements twice last week, one before the break or one on the 28th, I believe it was, and then after when it started to kind of break down. And this is very similar action to, if you take a look at Bitcoin when it had its terrible, well, actually silver was worse, but this bad break in Bitcoin. And both of these were largely driven by extremely levered, concentrated positions that kind of broke everything. I think the reason silver fell so hard, even if you go back to the 1980s, you look at when the silver corner broke, it didn't fall this quickly. I've never seen a commodity like this fall this quickly. I think that just points to how incredibly levered the market has become through either, futures, now more retail trades futures, all of these ETFs that are 2x, 3x, 4x, 5x. I think they're talking about 5x funds, like kind of like off broker leverage. You take out a line of credit to then lever up with your broker. So people have these massively concentrated levered positions that I think that's what's causing these massive swings. And what people have to understand too is it upsets other trades. There's correlations. If you take a look at, I had a position NLR, which is kind of nuclear ETF, and some of those will trade in conjunction because there are smaller kind of stocks in there that will move with commodity markets. Because silver broke down, is that really makes sense to have nuclear related stocks fall? No. It's just a correlation that, people who own silver probably have some uranium and they're probably going to be selling both of them to cover margin calls. And so that's why, when the volatility goes up, I know it can be kind of, the thought process will be, well, hey, who cares? I have this stock. I'm not trading silver. But there's the old saying is, when you have to sell, sometimes if you can't sell what you want to sell, you sell what you can sell. And it causes kind of like a cascade correlation between markets, and you get these weird breaks that come as a result of that. So, it's funny. We were talking about silver. I think everyone in the world saw it was going parabolic, but still didn't mean it was easy to short because it was also parabolic here, 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 and here, and finally here it broke. Um, but to the point, and what we're discussing is that there's so many unknowns in this market right now, and there's so much of a lack of a nice consistent trend that all these news like margin increase or a break in another markets are causing these big swings. I think to your point, and what I've been kind of hoping for would be if the triple Qs would fall 10%, I think would be nicer and more fun for everyone because once that pullback would happen, then we'd have the fuel and the foundation for a nice trend. Instead, like you mentioned, everyone sees a similar trade, and when it gets overweighted, it just breaks and goes the other way just because of positioning. So tough
Right.
market indeed, Jason, and I've been feeling it as well.
I think also on that silver thing, one thing that I have in my mind always, um, and I was making the argument that I didn't think silver was a short, and I'm supposed to be Mr. Counter Trend. These are the kind of moves that I usually will catch, right? Not always, but usually will catch. And my stuff did not have me catch this. But even without catching it, and even with thinking that silver was not going to do this, one thing that I know after 35 plus years, no matter what you look at, no matter what indicators you use, no matter how good your stuff has been, no matter what, you better believe that markets can do anything at any time for any reason. They will. So that's why you have to watch your risk consistently. And that's why you have to not believe your own bullshit.
Yeah.
Okay. You have to know you can be wrong at any time. You have to know that you could be massively wrong at any time. And I get ragged on a lot because I don't use a lot of leverage. Right. And my numbers could indicate that I should. I haven't had a 5% drawdown, so why don't I lever up more? Well, this is why.
Mhm.
Okay. Um, I get, and I wasn't long silver, but I could have been, you know. And if I'm long silver and that thing goes 40% against me, guess what? I haven't had a 5% drawdown. Well, I can assure you that that would have equated to a 5% drawdown. Okay. A hell of a lot more than a 5% drawdown. Right. So I think that's an important thing to keep in mind. I know you're great. I know you're super smart, and I know you've been killing it for the last few years. And that's wonderful. But you got to keep in mind at some point, this shit is going to do something crazy that goes against everything you know. And,
Mhm.
and you don't want to get wiped out when that happens. And that speaks to not being over leveraged at any time. You always wish when you're making money that you had more leverage, you know? But This is a game of over time, and over time, you gotta watch it because these markets will do stuff that I promise you, you didn't see coming. I've been a counter trend trader for going on, I've traded one exclusive process, counter trend process now since 2000. I've been pretty damn successful at it. I didn't see this move coming at all.
Hmm.
Yeah, I mean, if silver went down, 10, 15% over a couple week period, would that have shocked me? No, right? That would have been semi-normal within this trend. 40% in a day? Not in a million years did I
Hmm.
see that. And I know silver. I've traded silver a million times. I know that when it goes down, you can go back through history. Silver has massive moves down, right? It's a very volatile commodity that has a history of having very big down moves out of nowhere. I've seen them many, many times over the 25 years. Okay.
This is 2011.
Right. So like I'm not shocked by any of that. Um, Even these other ones, you look at that one in November of 2010, it doesn't look like a lot on that chart, but at the time it was a massive move.
This is
Okay.
1980. This is the silver corner that ended. But I mean, this fell much more slowly. It was a locked limit down move, but it
Right.
wasn't the same 40% one day crash. Just to kind of put
No.
into context how wild
And
that
this is
move
what I'm
was.
saying. I mean, look at what copper did just last summer. In the midst of the biggest copper boom, maybe look at that move, right? Trump announced whatever, some kind of tariff, lack of tariff on copper, whatever that day. And look what it did. And look what it did even
Yeah.
back 3 months before. So, and then it went all the way back up to highs. It meant nothing,
Yeah.
right?
Yeah.
Um, but if I'm long that copper move and it makes that kind of move, from 6 down to whatever, 450, 20 whatever percent move in a day, I'm getting crushed, right?
Yeah.
So you have to keep in mind that these things do happen. And I'm pointing to commodity markets, which are volatile. But hey, Microsoft, does it get more blue chip? Thing was down 10% the other
Yeah.
day. You know, I think you got to remember these things can do and will happen, and when they do, you're not going to be prepared. if
And,
you're
and
if
you know, it's
you're
obviously about the money because especially if you have leverage, just these kind of things can blow you out. Even if you don't, just like through my experience, if you're wrong, like I'll admit it. Like I mean, I've had good ideas, but I can't make a ton of progress because I mean stops. But as long as I look at my P&L and I don't have a massive drawdown, you can go boxing a little bit. I'll go play guitar. You play with the kids, and then next day, okay, clean slate. Let's go again. That's different than when you're looking at a massive drawdown because you wouldn't take your foot off the gas, and now you're down 30%. And guess what? You got to make back 50% to get back to even before you can start making money. And I had that experience. When I was a market maker, it was different. Like you said, there's always a season for everything. And summertime, I was young, just started, and I didn't want to stop making money. And so was August. And 2 years in a row, it's like, hey, no, I don't care. It's August. I'm not going to go to the beach. Let's make money, right? Well, the whole created in August because there wasn't the same liquidity. I put on similar positions that then after by the time I got out, yeah, things were much lower. Well, guess what? Took till October before I could start making money again because from September and October we're making back August stuff where I could have been at the beach having a good time. And instead I was pissed off and frustrated on a nice summer day. And then I was stuck with the rest of winter when it came around. So just knowing when to take your foot off the gas is still, I think unless someone gets to there, they can't understand. And it sounds like we're being overly cautious. But at least, if they do hear the message when they do go through it, they'll realize it's normal and they can adjust for the future. So hopefully it brings some value to somebody who hears this
old
episode.
traders and bull traders, no old bull traders.
Yeah, yeah,
And it's all
exactly.
fun when you're young and it's a bull market and you're leveraged and you're making a ton of money. I know it. I've been there. You've been there. We've all been there.
Mhm.
But and we can all say it together. Okay, boomer. All right. Well, there it is. I'm a boomer and I'm talking like a boomer and I'm giving boomer lessons. And don't listen to me if you don't want to. If you're young and smarter than I am, which hopefully you're younger than I am. And hopefully you're smarter than I am. And hopefully you're a better trader than I am. And I hope you are. And good luck. But been doing this a while. I've known a lot of people that have been doing this for a while. I've witnessed a lot of people that are doing this for a while. Know that things happen sometimes that you are not going to be prepared for. And the only way to be prepared for that is to not be overlevered.
Yeah. Well, even Charlie Munger, the Buffett's right hand man, said the three ways to go broke is what was it? Liquor, ladies, and leverage. The three L's. So it's I find in the market whenever there's like a saying that has lasted multi generations, there's a truth to it that you have to kind of stick by.
It's a fact.
Yeah,
There's a reason why these things get said.
yeah. And so this is actually a good segue because we got an email from somebody in our Q&A, and again, it wasn't a hate mail, so it's a plus. Um, but Jack asked, he says, what do you guys think of using precedents in trading? And if you do, how do you go about it? Also, I would love if you guys got Mike Webster on one week, if you're looking for guests. Thanks. Mike's the best. We were with him down in Florida at the Elevate conference last year, and a lot of fun hanging out. Jason, Mike, and I have very similar taste in music, so we had a lot of good discussions.
Love Mike Webster. Great guy. Great guy.
But to that question, so for those who are used to kind of William O'Neill or growth investing, that style, there's a lot of discussion about precedents, like trying to find another stock that had a similar move and seeing if the stock will do the same. I never really ran it that way. It never really worked for me. But what's worked in my mind, so I can just speak to kind of what has worked for me, is I'm kind of like a fan of history. I love reading history. I love trading. I love trading history. And now I've been trading for long enough that some of it just reminds me of times that I traded. But back in 2011, the triple Qs had a big move off of. Sorry, let me get this to a simpler chart to begin with here. Let me just one moment, just to kind of discuss how I like to kind of look at past times. If we go back to 2011, the markets had a big move coming. It was a really choppy period in 2010. 2011, we had this really big, strong uptrend. Very, very powerful move. This was the first time I was able to kind of get position trading to. I was still a market maker, but we were given extra capital. As long as we didn't take big losses or go into drawdown, it was fine. So I was able
You
to
could
kind
do
of,
whatever you wanted as long as you didn't lose money.
yeah, they always said we have all these risk parameters, but the reality was as long as you weren't, I don't even know what my intraday buying limit was. As long as you were green, they kind of just let you do what you want to do, which was a nice environment, a fun environment, a bit dangerous for a kid back then. But this was the first trend I really nailed really well. And because I was market making for a lot of gold and silver stocks, because that was the industry I had. If we take a look at silver at that time, let's take a look at just silver here. You can see if you look at the blue line, silver had an equally kind of wild and crazy run. That was like the last, and then we had the similar bad break. But what's pretty cool about this as a comparison to the current market is that, the market peaked in February 2011. I know from experience, all of the growth stocks, like the hot stocks, that was their peak. Even though the market went higher in April and in July, February is when the party ended. And then on that next step up, like as the market just barely got above its high, silver was still going vertical at that time. So if that sounds familiar to what's going on right now, it's because it is similar to what's going on right now. And, so what I like to do is I like to look at similar times where we had similar environments. And so if we kind of just lay these on top of each other, very nice steady uptrend. We had initial pullback. Silver was going crazy. And then ultimately here, what happened is that we just ended up with a lot of chop. So kind of like my base view is looking at this as an example. This is how I'll use precedents is what's similar about this market dynamic. And not that I expect it to follow this exactly. For me, where I tend to be to the long side, I tend to be a bull. I trade stocks, I trade growth stocks. You do it because you're expecting larger moves typically. I like to have an alternate view. Say, hey, Matt, when was there a typical time you were trading or a typical market environment where market had a similar advance? This was 41% in 161 bars. If you take a look at here from this bottom here, I just avoided the absolute craziest weakness. But 47% in 133 bars. This drops 9%. This drop is 9%, and we get into a lot of chop. Similar market environment. And funny enough, if we go back to 1995 on the NASDAQ, just another similar comparison. Because, myself, I have a bullish outcome and say, wow, the 90s was just a great time, easy money. Well, coming out of the 94 market correction, you also had a 49% rally in the NASDAQ. And guess what? You went into this very similar choppy period that was about 8% deep, lasted another couple of months longer than we did now. And what happens? You came out of it and you had another nice uptrend before you had another deep pullback again, but just kind of comparing like where we are now, is this abnormal with what we're seeing? Would it still be normal even to see a retest of the November low? In fact, kind of to the discussion before, that's my view is if we got an 8 or 9% pullback from here, I think that would be the best case scenario because that would kind of work out a lot of the weak hands, the weak levered longs, then we can set up for another good foundation for a move higher. So just to answer the email, that's the way I like to use precedents. I like to look at, what was similar economically. Like in the 90s, we had a lot of similarities in terms of like the productivity from the internet. We came out of a correction in 94. In 2011, we had a lot of similarities in that we had similar price advance. We had silver taking the lead after the QQQs peaked. So I like to look for those similar situations, scenarios. And then it's kind of like a rough guide. It's the reason why last year I was so, put my foot down for all of the year because 1995 was kind of like what I was expecting. If this is a breakaway moment for AI, it was kind of like a nonstop buying environment. I still think we're replicating the 90s in terms of this tech rollout. So, but even with that perspective, this is still normal. And so there's still a lot of chop. But that's how I use precedent analysis. Jason, I don't think it's part of your process. Is it something you've looked at? Do you have any comments on it?
I do it all the time. It's not necessarily part of my process, but like you kind of said, it's part of my process in trying to look for where I could be wrong,
Hmm.
you which is very important to me, right? Where have things gone wrong in the past when I have seen them line up the same way they're lining up now? Um, and in fairness to myself, I tend to be a little bit hard on myself. But I did 2 weeks ago in my newsletter write a whole thing about how, look, my stuff is not saying anything here about the chances of silver getting cracked. But if we look back at one time here, I think it was 2011, my stuff didn't say anything about silver getting cracked then either. And it did. Right. So I kind of look at it that way. I'm always expecting or trying to at least anticipate the fact that I can be wrong. My stuff can be wrong. I love to have that in my head. Um, because when it happens, I have to be prepared for it and not blow out. It's just that simple, right?
Yeah.
Um, so that's kind of how I do it. Although I like what you were doing, and I do that stuff too. I kind of spend looking at charts and looking at precedent before, and I don't think it can hurt. I don't trade off of it.
Hmm.
Um, I then also like to, of course, because I'm always trying to fade consensus, I like to see how many other people are looking at the same type of thing.
Right.
Um, there's a lot of these people that love to do the seasonality stuff, right? And we saw how that worked last year. It was kind of horrible, right?
Hmm.
And the big one we're hearing now is the first 5 days. I've heard this one for many years. Not to say it hasn't been right, but the first 5 days of January are indicative of what's going to happen in January. And if they're up and January is up, then 97% of years are up. Okay. I'm not going to fight with that. But we are hearing a lot of it. And that stuff really, obviously, the more people that know about that, the more that gets discounted into the market already, and the less chance it has of working. So I like to look at it from that perspective too. You know, how many people are seeing this?
And I think it has to be done with the right lens because what I hate, and ever since the financial crisis, every year I see someone scrunch up a chart, overlay that like the S&P from like '07 and the current market and say like, oh, we're on track. And in 3 weeks, we're going to have that breakdown. I've seen that same chart every year show
Yeah,
up.
yeah,
It's always going to be the financial crisis. So
yeah. It's
again,
got
yeah, that's why I don't do a correlate. So to the email, I like to look at the whole scenario. Like I'm looking at the '90s because I think there's a similar kind of productivity boom based off of a new technology. I'm
right.
looking at, 2010 because we had the QE push and if we look at how spending has been going and the
Mhm.
expected new Fed cuts, and if you look at how silver kind of got going. So there's, the charts, there's similarities in the charts, but there's also similarity in the backdrop because it's one of those things you can very easily make look like how you want it to look if you have if you have a bias going into it. You know what I mean? So
Yeah,
that's the way
yeah.
I like to do it.
I mean, that's the danger with that stuff is you can always find something. and the chart and a historical chart that can build your argument as you want it to be built. It's
Yeah.
like any analysis. You have to get your bias out of it. Otherwise, it's not analysis. It's bullshit.
Yeah. Well, so if anyone wants to give us a question, we'll try and cover one, at least one each week. You can go to marketsunscripted.com. You could put your question in that box. But let's head over to current markets here. Let me get this screen shared again. Which one is the right tab to pick? Let's go with this one here. So taking a look at current markets, so still a lot of chop just in the cues, not a whole lot of conviction. Again, my base case, just off of what I just spoke about, is I don't know if it's hope. Again, I don't want to make my hopes match what I'm seeing, but I still think that maybe we get a little more of a shakeout because I think if you look at sentiment readings and all the rest, people are still fairly bullish, which is surprising. But given what the market's doing, going back to the discussions we've had of AI, we're in earnings season, but I still have strong views on stocks like AMD. I think a lot of the optical gear is starting to come under a lot of demand. If we take a look at Corning, uh, did we speak about this last week? I'm not sure if we spoke about it, but it's one that we had news last week that Meta inked a $6 billion deal with Corning to secure specific cabling for their data centers. It's rare, but I love when a more mature company gets a new catalyst like that because it trades like a mature company. There's a lot of liquidity. It's not overly volatile, but this new catalyst and a lot of let's say more momentum oriented traders are not looking at it because it's Corning, but that catalyst can really get a lot of the GARP, growth at a reasonable price group of like institutional investors to kind of buy persistently for weeks or months. And so Corning already had its first kind of nice move starting in July. Hadn't done a ton before that. We'd been in the same place for quite some time. But I think really big catalyst, one of the few stocks up at highs. If you look at VIAV, they do testing equipment for optical components. So, the problem is a lot of these data centers is copper has its limitations. And so if you want to transmit data at faster and faster and faster speeds, you need just how we have fiber optic cables instead of copper to bring internet to our homes now. A lot of that is starting to impact the data centers as well. And so these are two stocks that have been very strong in a tough tape. I was positioned in both of them, but it's hard to keep those positions in the chop. But this is the group that I've been looking at most closely, and we'll have to see how it kind of goes. I think the nuclear trade is still one that we have to pay attention to because I think the administration wants to push it and the demand is there. This is the ETF. I think the best stock way to play it is Cameco, CCJ, which is actually doing better than the ETF. But we are in earnings season. That's the other complication. Every 3 months, you have to watch all your positioning for what are these dramatic earnings gaps, like we saw even Microsoft falling 10%. But these are some of the main trades that I'm watching and looking to kind of position and build into. Anything that you want to point to specifically, Jason?
No, I think those are right along the lines of the type of things that I don't really trade individual stocks, but I do pay attention, and those are right along the lines of what I'm thinking. Where these shortages are in the AI world, and which ones are actually confirming that, and you're showing ones that certainly are. Those optical stocks certainly are confirming the idea. You know, why
Eh,
not? Why not be in the companies that are providing the answer to the bottlenecks
mhm.
that we know exist?
And, and two, like what we always speak about, you don't want to get biased by the names. I always had a hard time with that, but as you get used to it, you kind of get look over. But like, something like a Palantir, which was, the leading stock for last year. I mean, this is looking terrible right now. Even, Microsoft was untouchable for the longest time. Stocks like Robinhood, which was one of my best gainers last year, looking terrible. I mean, breaking down, and there's still good news that'll float around. They're going to bring out new products, new services. Maybe it'll eventually impact the stock, but you can just kind of, I mean, it's as clear as day, especially if you kind of overlap a triple Q on top of that, just to kind of compare.
Yeah, that one's struggling for sure.
As the blue line, which is the market itself. I mean, first of all, you can see this stock made its highs before the market. So this had already peaked by the time the triple Qs peaked. And
Mhm.
just every time the market makes a rally, this has a lower rally and it's breaking down. So I mean, of course, it could have a turnaround. But point being, especially in a fast moving tech driven market where there's new winners and losers all the time, you have to stay open to what I think the market is rewarding. And if you get kind of fixated on the name that you had or what worked well in the past, that could actually really work against you sometimes.
It's death.
Yeah.
Being married to a name is death.
Well, I mean, actually, it's kind of wild because some of the worst stocks this year were some of the best last year. There's even Ethereum. I don't know if you, I saw this news. I don't know if you know Tom Lee. He's on CNBC often, but he's, I don't know if he's the chairman or whatever of BMNR, and they're implementing a strategy similar to MicroStrategy, but for Ethereum, the Ethereum
Yeah.
coin. And right now, I just saw a report come out. This is the fifth or sixth largest capital destruction on record ever. I think they're down $6 billion out of their 15. No, out of their 11. I forget the numbers. I don't know if they raised 10 or 11. They're down 4 or 5, and there's six left or whatever it is. But just but it's amazing because so many of these were some of the best trades of 2025, and they've been the worst places that could be sitting in 2026. So it's comes at you fast.
Even Tom Lee can lose money, right?
Well, I think he probably still gets his salary, I would imagine, for
Yeah, he ain't
being.
losing a dime. Let's not make a mistake about it. He's a rich man because of the deal that he made with these people. So, and same thing with Saylor. People are ripping into Saylor. Well, Saylor's worth billions of dollars. He's laughing all the way to the frickin' bank.
It's amazing, and that's just you don't want to get cynical with markets and things, but yeah, like he's making billions, but I think his cost basis on Bitcoin is what 76,000 a coin, which
Right about here. Yeah,
he
pretty
was
damn
under.
close.
So there's no gain on the trade he put on, which he basically just put a giant trade on with other people's money, but he's a multi-billionaire. So I guess don't hate the player, hate the game, right?
Exactly. I wish I've been trying to find my whole life a way to put myself in that position. Stupid me. And the only way I get to make money is if I make money for people. Like God, who's the moron? But
But
hey, whatever. I can sleep at night
yeah, that's the
most nights.
well, and that's the part that frustrates me because it pays, but all the laser eyes and this is going to whatever, and it's fine. Maybe you end up being right, but again, if you can't determine where you're going to be wrong, well, then you go from I think taking a calculated risk and investment or whatever you trade to just a gamble at that point. Because if it works, it works.
He can never be wrong for himself.
Mhm.
There is no wrong. He's got a free call,
Yeah, massive free call.
massive free call. So,
Yeah.
you know, whatever. Good for him. He's a billionaire. I'm a putz.
Any positions you want to take a look at on the COT related, anything that stands out that's different this week?
There's nothing really too exciting out there right now.
Okay.
Frankly, I mean, arguably, some cocoa is starting to act well finally. Although the position has come off a little bit, it's not as crowded as it was. There's really nothing here for me
Mhm.
that's very exciting. Unfortunately,
Mhm.
I'm curious, very curious to see. Obviously, as we all are, what's going to happen to the metals.
Yeah. And I think that's gonna have a lot of a big impact on so many other markets because I think because of the leverage and the overlapping effect between groups. So it'll be one to watch super closely. Yeah. Okay, well, you can visit carusoinsights.com to register for that free AMA. You can check out Jason at crowdedmarketreports.com. We'll be back here again next week, and we'll see if the market can finally break out or if the bears will finally get a push lower. Right now, it's no man's land. So we'll have to see how it goes in the next few days. We'll talk to you then,
Yeah.
Jason.
All right, Matt. Thanks.
All right. Thank you.